welcome back to the rationalinvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello everyone, welcome back to the rationalinvestor.com's Weekend Frivolity, the Broiler Chicken Show. Back. Duplicate stream keys. Uh-oh, here we go. Always fun playing with YouTube and making sure. In fact, actually, Chris and I were even joking about this whole technology space. You all feel like we're becoming slaves to these computers? Sure feels like it to me. I was looking at some pretty nice farmland over there in Portugal. 50 different fruit trees and running rivers and stuff in the property. And it's sort of like, yeah, wouldn't it be nice just to go back to the days of yore when you just lived off the land? Anyway, welcome back to the frivolity. I suppose without all of our wonderful interneting and all that crap, you couldn't get this broadcast from Brian on a regular basis. So I suppose there's pros and cons both ways. Anyway, FYI, we are planning our big, I don't know, week. I don't even know what the hell to call this. I think we're trying to do like a semi meetup kind of idea in El Salvador of all places. But anyway, going down to kick the tires, just see what the hell the landscape is like down there. Never been that far south. I've been to Mexico, of course, but anyway, so visit to Central America should be a very educational experience. So by all means, if you happen to be in the neighborhood, I think it's February 15th through the 22nd. Why we decided not to stick around for Friday, February 23rd, I'm not quite sure. I understand correctly, there's supposed to be a big sort of get together of Bitcoiners there the last Friday of the month. But anyway, it is what it is. I think I'm flying out on the 22nd. So Chris and I actually are going to be making our way down the west coast of North America. So if you happen to be in Seattle area, we'll be in Seattle on the 6th. I think actually I had suggested to site members, I might have like a bite to eat or something the evening of the 6th, and I'm going to pick Chris up at the airport that evening. Heading down, we'll be in Portland on the 7th, and we're going to do the Coinigy show, which we do on the Wednesdays. We'll do the Coinigy show with Joe out of Portland, because that's where he is. So that'll be fun. It should be an interesting evening. Then, if I understand correctly, we're going to make our way down to the San Francisco area. And I just clued in. It turns out we've been invited. Well, actually, I think Chris has been invited. I don't know whether I have. I might just have to stay in the hotel room. But I think Chris is heading off to a Super Bowl party on the 11th. Maybe if I'm really polite, they might let me in. I don't know. And of course, we're going to be hanging around with a whole bunch of people from San Francisco and Sacramento and stuff. So I wonder which team they're going to be cheering for. Anyway, it should be an interesting event. Hopefully lots of fun pictures. And hopefully nobody ends up face down in a ditch, but you never know in this crazy world. Then we're going to be sort of meandering our way down to LA, 12th, 13th, 14th. And actually somebody just asked me whether we'll be stopping in Santa Barbara area, if we can. Duff, by all means, reach out to Chris. Chris is going to be like our navigator for the trip. So if anything, if you want us to stop and make a specific stop in your neck of the woods on our way down, please just reach out to Chris, and I'll PM you on the site that as well. And thanks for volunteering to be the navigator, Chris. Appreciate it. And then we're going to be hopping on an airplane, and actually, hopefully, we get to hang out with people like Shartoshi. We should be in the LA area for a day or two, kind of idea. And then we fly out at some crazy ass hour, like literally like 3 o'clock in the morning or some just insanity like that. to get to El Salvador that same day, and we're going to be spending a week in El Salvador. Then I'll be heading back to Vancouver. I'll be flying back to LA. Then I'm just going to slowly just basically do the exact reverse. So if we don't hook up with you, Duff, on the way down, I might just do pit stops all the way on the way back up. And if you got a couch that I can sleep on, I'd love you dearly for it. You know, the price of a hotel is good, 150 bucks or something a night. So I could buy you a nice steak dinner or something in exchange for letting me crash on your couch. Anyway, it's up to you. So attention all TRIers. If you can't hook up with me and Chris on the way down, maybe I can catch up with you on the way back up north. Regardless, we should have plenty of time to hash all of this out, and hopefully I'm back in Vancouver near the end of the month. Probably the biggest stressor out of all of this, which really sucks, but there's just nothing you can do about it, is my poor old son. You can see that he is not happy whatsoever about dad taking off. And how the hell am I supposed to go and like relocate around the world? He won't even allow me to go on a trip for 2 weeks without him freaking out. But anyway, so when I'm done this video with all of you today, of course, I will be heading to my job and giving Liam as best an afternoon as possible. And unfortunately, everybody just say a prayer for Lily. He's going to have to go 2 or 3 weeks without the old man. I think we have a pretty good support team in place. It's just, obviously dads spoil, whereas, medical workers, they don't really care. They just bark orders. So anyway, that's going to be the month of February for me. This is going to be one hell of an adventure. I'll tell you that much, bike crackers. Let's hope I make it back in one piece. PMA for the win, all that. So if you happen to be on the West Coast or happen to be in Central America through this Windows, check in with me and see if we can maybe have a nice afternoon lunch or dinner or something like that together. All right, on to market talk. I put together this newsletter. Chris and I put it together before we start this Broiler Chicken Show, and I think it's a pretty good sort of just quick little summary of what happened in the past week, and general sort of prognostications in the market, especially things like big econs and stuff. Also, too, I think it makes sort of a good backdrop for what we should be focusing on. Of course, unfortunately, Brian gets headed off on tangents every once in a while, and the rhetoric comes out. I do understand that there's quite a few people that watch these videos that are like, Jesus, this guy just talks so fucking long. He doesn't really say anything. My apologies. I'm not really that good at all this kind of publication stuff. And you see how many viewers we have here. I've been doing this for 10 years. You'd think I would get a little bit better at this, but oh well. I use it more as just kind of like a pulpit to rant half the time. This is my Sunday sermon, if you will. Keep in mind a big sort of objective of this weekend show is actually to speak to current students, just in case one of the instructors that happens to be teaching a module the past week maybe couldn't answer a question that a student had. This is the opportunity for both, old students, new students, site members, just to simply ask me a question. We have this AMA document. I think Chris posted in the lounge. So by all means, let's see, where is the lounge? If you happen to have a question and you'd really like to ask, I see Chris posted it, feel free to pop on this document and add your questions. And also, too, especially current students, odds are you are not the first person who will have asked the question that you're asking. I would say 95% of all questions that are asked repeatedly. It's consistent how this works, and it's understandable because I do throw a lot of sort of really big picture concepts at you guys, and you've got to learn and you've got to sort of digest it very quickly So odds are the question that you ask has probably been asked repeatedly. So my suggestion for you, and you can see, I mean, this goes back quite a ways. We started this document in particular basically a year ago. So this is 1 year of questions for Brian. You can see from January to January. And really, I mean, hell, we should probably had this from 2014. But the point I'm trying to make here is odds are your question that you are going to ask has actually been asked before. So just take the time and just scroll through this. And then keep in mind that all of these videos, everything that we do is saved on the site. So, let's say, for instance, this person asked a comment about USM1 and it's back in September of 2023. Well, you can go as a site member, of course, you can go on the video library, video recordings, and you should be able to just scroll back to that show. And not only you've got the AMA question and my answer, but you should be able to go back and literally just watch the video from back in September. Look at, we got 200 pages of videos here, and each page has how many videos? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. That's 2,000 videos. And the average duration of these things, of course, Brian loves to hear the sound of his own voice, is usually easily a good half hour. I mean, Jesus, that's ridiculous. It's thousands and thousands of hours of material. I mean, hell, you could literally learn, and we've actually had people do this on the free YouTube pages where they've literally learned to teach themselves how to trade just by just going and watching all of these videos and taking notes week after week after week after week. I appreciate that there are a lot of people that can do that sort of self-teaching. And if you're one of those people, then, awesome. Hats off to you. I can tell you, I'm not one of those people. I definitely need, sort of a guiding instructor type person if I'm trying to learn something new in earnest. And I think that our education program, the actual paid for education program, is really, really good. And like literally holding your hand from day one of you starting the program right through to actually now the level 3 program. I'm back teaching the level 3 program. And I work, in fact, the level 3ers right now. One of their big assignments is filling out their report cards, which none of them want to do. But frankly speaking, if you fancy yourself a professional trader, you got to do this stuff. So this person didn't put their name on their report card, so I think actually I'm comfortable to show you. But this is a typical sort of week 2 of the level 3 program. I get all of our students to get into the habit of filling out a report card and actually grading yourself on how you're doing learning the process. So, I guess just the point being that, you can be this self-starter, self-teacher. If, however, you need that very structured, very robust education program that literally forces you week after week, month after month, maybe some people year after year, to learn the process, follow the process, put all the tools in place to both monitor yourself and monitor your behavior and monitor your attitude and all that kind of stuff. Well, I think our education program is second to none. I haven't really seen anybody else on the net do as good of a job as we do. And that's, Brian's slightly biased. I don't know. Anyway, so school term, of course, already up and running. So as I said, AMA document, I think we have a question or two from students this week. It should be, I guess, yeah, there we go. So I guess this is our week. What heading is this? That's interesting. How do you do that? 20 point. Okay, we'll just make that 20. So we got one question. I would oh my, lots of fun stuff. Ooh, looks like we got lots to chew on here today. Well, I'll get to that after sort of the rhetoric. It's 11:30, 11:20, 11:25, 11:30 area. So we'll just maybe cover this over the next 40 minutes or so. Sort of overview of what the hell's going on in the world. And then we'll hop into that question. Yeah. As I said, if there are any current students watching and you have questions, please, fill that out. This is your opportunity. And then also too, if anybody happens to be watching there on YouTube and you have a question, feel free to ask. So we'll spend the back half of this hopefully just answering your guys' questions. So once upon a time in a land far, far away. I guess just a quick commentary on the breadth. Quite often when you see markets in transition, you're going to get a lot of this sort of herky-jerky back and forth action on algorithms. I mean, by definition, this is the way a lot of indicators actually operate. It's one reason why I'm not really the biggest fan of just trading off of indicators. Like in our level 1 program, we talk about how a lot of people just trade the MACD system, and when the lines cross buy, when the lines cross sell, and you end up in ranging markets getting chopped up. And I do see that to a certain degree with like the breadth indicator. You can see buy, sell, buy, sell, buy, sell. And we're kind of sitting here in no man's land. I don't mind if you want to trade the algo, that you just, live by the sword, die by the sword. What ends up happening is you might get chopped up like this and have like a half a dozen sort of non-trades. You maybe make a little bit of money, maybe lose a little bit of money. Then you get into a trending market state and you've got a signal to be either long or short, and you just ride that signal for a month or two. That's usually how these algos work. And anybody who is algo trading right now, I would imagine in this real back and forth type market here, it's probably extremely frustrating. It's just chop Vegas. I don't think that the market is really trending right now, and that's sort of my commentary about Bitcoin right now. Is I do believe that the market was heavily manipulated, and frankly speaking, it's kind of sad when the longer that I live and operate in this market, the more and more I see that we don't really live in a laissez-faire capitalist society. We live in a highly manipulated, highly, highly controlled society that they use the headline name brand kind of, of course, I think it's a lie, but they call it capitalist, they call it free market. And of course, the problem is that the people that are in control of our society, they want the public to buy into the framework that we live under. And so they use a lot of these terms, but we're not really free market. I mean, hell, any of you that have gone through the whole crypto experience over the past 5-10 years, you see how heavily manipulated this whole landscape is, which is it's a bit tragic. But I suppose half of our job is not necessarily to cast judgment. As individuals, there isn't really a hell of a lot we can do about any of this. It's so crooked. And keep in mind that these banksters, they've been at this since the days of Jesus. I mean, I do find it's an interesting tell that the only reference of Jesus Christ, who theoretically is like, according to Mr. Muhammad was basically the cleanest of all prophets, probably the cleanest human other than maybe the Buddha to have walked the earth. The only time in the entire reference that you ever see him in all of the teachings about this guy, the only time he ever got angry, the only reference was over the banksters. That's got to tell you something. That's got to speak volumes. And I'm actually a little surprised that more people in our society don't clue into that brutal reality. So, anyway, these guys have been at this for thousands of years, screwing us over. So, it really shouldn't surprise us that it's just basically business as usual. But, what can you do? I mean, some clown on the interneting barking about how corrupt the whole damn thing is, and he gets 35 views of his videos. Some clown sitting there barking about, oh, it's the end of the world. The market's going to collapse. Everything's going to fall apart. 5 million views on his video. And of course, completely wrong. Drives you crazy. So, I mean, it's remarkable to see how, even in this day of social media and all this, it's the same bullshit. They would always say because keep in mind, I was a broker for a long time. I played the game. And basically, a broker is nothing more than a glorified used car salesman. It's the same damn thing. And in fact, what pissed me off is I went to our fucking communist healthcare system, and now even the nurses are talking like used car salesmen. I mean, I think that they are actually coached. There is specific words that they are specifically told to say that are like, this is all a game of confidence. And they don't help you. They don't do what they really ought to do. They're all about, kind of like bait and switch, hey, look, here's the shiny object. Pay attention to this. Don't pay attention to the fact that we're not going to let you see a doctor, even though, and in my entire 50 years, under every other circumstance, I would go see a doctor. No, 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 no. Well, in our wise world now, you don't need to see a doctor. Like, what? Jesus. Anyway, that's here nor there. So point here is, there's a guy that I really respect on the interneting. Although I can never remember his name. I think his name on YouTube is RJ Talks. Is that his name, Chris? Chris always remembers these guys' names. I think that's it. RJ Talks, is that what it is? I don't know if Chris is still here or not. Anyway, all right. Yep. Thank you, sir. And I always do that every once in a while just to see if Chris is paying attention. Which I'm sure he doesn't like, but anyway. Sorry. Anyway, he did quite an extensive video the other day, and frankly speaking, I'd have to agree with him. He gets a lot of views of his channel, so that alone must mean that he must be an authority. But let's see if I can find him. I think I tweeted out the video. But I think he is actually question, of course, where the hell do you get the damn? I think that's it. This over here, right? Let's see if I can find this video. He actually sort of uncovered, and I saw this happen. A Canadian guy, of all things, a Canadian guy had pointed this out. But about a month or so ago, let's see if I can find that guy. Where was he? This guy's really good at the shill, and he's of course got 1 million followers and 10 million views of his videos and all that. And some guy that I even commented with is like, this guy's like total clickbait. And you're absolutely right. I mean, these guys are really good at this shit. It's incredible how good they are at this shit. I'm terrible at this stuff. But anyway, I wanted to show you, and I thought I tweeted it out. I think no, it's not this guy. Oh, that's a shame, because this guy, it was a really good, and by all means, you want to know what inflation really is, go watch Uncle Milton. He'll tell you. And then, of course, you want more on JC, his hatred for the banksters, and how this same fucking plague has plagued humanity for 2,000 years, and the way that they keep fucking us over century after century after century, go watch the Money Masters videos, right? I mean, the irony of it all is none of this changes. But I wanted to show you, there was one really, really cool video, but I don't know whether maybe it was too long ago. I gotta waste too much time finding it. Anyway, so this gentleman pointed out that the Bank of Canada actually left their fingerprints all over the market in that mysteriously last October, even though there wasn't really any justification for it, all of a sudden, out of nowhere, last October, all the central planners and central banksters, right? They all started their money printing bullshit all over again. It wasn't so bad down in the States. I mean, this is basically last October. You can see mysteriously this thing was trending lower. And ironically enough, if you actually wanted to get back to sort of like reasonable economics and leave this world of hyperinflation, then this number has to just get back down to like 3 or 4 trillion. Good luck. That's not going to happen. So they were in the process of correcting this, getting this sort of under control, kind of reversing all the bullshit about that whole sickness con job crap that they rammed down our throats, which was just justification for doing this to us. And you can even see in China, I mean, it's still absolutely out of control here. And this is scary because at least in the United States, they're trying to establish a new framework for what society is going to look like. Top end of the range, bottom end of the range. You can see basically we're going to be in a $21 trillion economy. And my hunch is that, I don't like it and I don't agree with it. It's a total con job. We've all been totally conned. The Great Reset. This is Klaus's Great Reset. All this bullshit. All they've done is just basically said, all right, add another zero onto the end of the price tag of whatever it is that you're interested in. That is Klaus's Great Reset. Merry Christmas. Fuck you. Which really sucks. But this is the reality of why Jesus hated these people. Nothing's changed in 2,000 years. But what's scary is this hasn't even stopped in China. Who knows where the hell this is going to stop? And the guy that's in control of my country, the guy's a total idiot when it comes to money. He's even said stupid things like, well, I don't really care about monetary policy. I'm just going to leave that up to the banksters. After all, they treated Jesus well. Jesus thought they were pretty nice guys. Why wouldn't all of us in Canada like them too? Well, that last part he didn't say, but it wouldn't surprise me because he's so dumb that he probably thinks that something along those lines. Anyway, so who knows how bad it's going to get in China. And like I said, what's a huge selling feature of China is, well, we have socialized healthcare. If you ever get sick, you don't have a problem. Bullshit. I am living testament that there is no socialized healthcare in China. The whole fucking thing is falling apart. And it's now like I have a tentative doctor's appointment set up for tomorrow, but I have absolutely no expectations that that's actually going to happen. And believe it or not, the medical community's recommendation to me is to actually self-heal, self-medicate. Oh, well, just go and do this on your own. It should deal with the problem. Well, can I at least see a doctor and get an actual No. You can't see a doctor. No. Yeah, you can see a nurse, but we're not going to let you see a doctor. Oh, fuck me. What a disaster. And they always say a pound of, how does that go? An ounce of prevention is worth a pound of cure, right? Isn't that how it goes? Something like that. So the medical system would be smart now to address this issue that I have, nip it in the bud. If this thing gets infected and it gets absolutely out of control, they might spend 100 times what they would have with just an ounce of prevention if I actually get really sick and have to be admitted to a hospital. And it's just fucking ass backwards. And the worst problem about it. So if you hear anywhere on the internet, any reference whatsoever to socialized medicine in Canada, it's bullshit. They are lying to you. It's a con job. This is really sad. Anyway, moving on. Point here is, and you've heard me rant about China forever. I mean, it's such a shit show what's going on here. Okay, back to our story. So this gentleman, RJ, talks. He had actually found some anecdotal evidence that it turns out, and you can see it in all the bond prices when we actually pull up the bond charts. You can see that something kind of weird happened here last fall. Well, here, that's a daily chart, right? So here is last October, November. Whole market was just heading straight down. And then all of a sudden, mysteriously, out of nowhere, the market actually started to W out and actually work its way higher. Why? And of course, RJ, and actually I should show you his video just so I'm making reference to the guy, so might as well give him a plug. This guy. And you see his picture. It should look pretty familiar. So anyway, this guy here. So, give him a like, give him a follow, tell him Brian sent you, whatever that. Tell him Large Marge sent you. Let's see, actually, that'd be an interesting one. How many pre-20th century, 21st century people do we have watching this video? When I say tell him Large Marge sent you, what movie am I referring to? Cotter, if he was watching this, he'd know what reference that is. Oh, very good. Yeah, TBG. You've got enough gray in your beard. You'd know that. Anyway, so interesting how he sort of uncovered some very nefarious, very good, Ian, some very nefarious behavior in the bond market. In that interest rates were just collapsing. Remember, Yellen at this point was coming out and saying, well, the U.S. government's going to come out and issue a ton of debt and a ton of bad bonds. And we're just going to drive the USA into the ground because interest rates are going to go through the roof. And then all of a sudden, mysteriously, like literally October 1st. And the interesting thing about this is this was on an eclipse, because we have another eclipse coming up here pretty soon. And I think what's happened here is that the whole market's going to pivot from eclipse to eclipse. So from first eclipse, that was the market bottom. It just came out of nowhere. And I think that this coming eclipse is going to mark a market top. And I've seen this happen in the market before, where the market moves from eclipse to eclipse. And this funny little window between the two eclipses is sort of an air pocket. And you can already start to see, why did the market start to rally here? Well, these central banksters all came out and started talking about how, well, maybe we're done raising interest rates, and maybe we'll even start thinking about cutting interest rates. And even like their betting platforms and stuff for the market that bet on when the interest rate markets are going to move again. Go watch RJ. He has lots of pretty pictures and graphs and stuff about all the betting markets and stuff on interest rates. I don't happen to have that handy, but I have seen it before. Anyway, they all went like, oh, there's going to be like 3 or 4 interest rate cuts. And then mysteriously, they got keep in mind, rising bond prices means falling bond yields. So all of these prices moving up means that interest rates have all of a sudden started to come down dramatically. And now in this latest FOMC meeting, all of a sudden now, well, actually, we're not really planning on cutting interest rates after all. We're data dependent. And didn't even make a reference to quantitative tightening, quantitative easing, just didn't even mention it one bit. And you can see that the whole market was just like, what the fuck? what just happened here? So what's really scary is that I think the scuttlebutt, the rhetoric is that there was a whole bunch of corporate debt that was going to come due, and had interest rates been at these levels when these bonds had to get reissued and refinanced and all that, a lot of American corporations were going to go out of business. They literally could not afford to refinance at these rates. So the central planners all mysteriously just came up with this rhetoric that actually it turns out the economy is cooling and everything's calming down, and actually maybe we need to actually lower interest rates going forward. And you can even see the 2-year bond, it actually started to break there at the end of December. It was already starting to see that, hey, something's not right with this narrative of actually we're engineering a soft landing. And interestingly enough, Jerry was asked in the meeting, and I think it was interesting. We did a public broadcast of the actual meeting, and this is why I think it's important to listen to those meetings and watch how the market behaves. I remember about halfway through the meeting, the whole market was rallying, everything was booming higher, and then all of a sudden, and I even asked after the fact, I was like, what the hell just happened? That somebody said something and the whole damn market reversed. I watched the video later on, and it turns out somebody, one of the reporters asked Jerry specifically, do you think that we have had a soft landing? And he said, absolutely not. It's just like, what? And literally on that moment, the whole market tanked and rolled right over. So a little bit of suspicious activity going on here in the market. I think that the economy is much, much stronger than what these bond yields would actually lead you to believe. I think that this whole market was incredibly manipulated over the past 3 or 4 months to make sure that, keep in mind, Joey Diamond over there, he doesn't make anything if these companies, these zombie companies that really shouldn't be in business, they're carrying mountains of debt. He doesn't make a dime if those people go under. He doesn't make a penny. However, if interest rates are conveniently moved to a place where these zombie companies can just keep it going, think of your crack dealer. If the crackhead all of a sudden gets religion and maybe even goes into rehab, how does the crack dealer maintain his livelihood? He doesn't. So it's actually imperative to keep the crack addict a crack addict. And I might argue that the banks, who of course run this whole joke of a con job of a society now, they have absolutely no interest in the crack addict actually losing his addiction. If anything, or her addiction, if anything, they want to encourage more crack use. Come on, it's a great drug. The girls, they absolutely love you. They think that your penis actually doubles in size if you're on crack. Really? Oh, shit. Maybe I should take some more. Whatever, blah, blah, blah. Anyway, so rather upset at what I'm hearing. What you actually see happening in the marketplace is a result of actually a very well orchestrated con job that's going on in our society right now. And if you don't want to listen to me, listen to RJ. I think he does a pretty good job. And of course, he's got a million bazillion followers. So obviously he knows what he's talking about. Anyway, so that was sort of the big part of sort of part one of my rant here. The interesting thing about this, though, is because they, like our talk for the longest time, let's see if I can find it without getting totally derailed here. Remember, I used to always show you the guys this. I would just type inflation, 1940s, CPI, maybe we'll even say, and the link would just pop up instantly. Unfortunately, I don't know whether I've been doing this right. Oh yeah, so it's Canada. Maybe US. I can't remember what the page was that I did. It might have been this one. Let's see. Are we lucky? Are we lucky? Are we lucky? No, this doesn't look right. This looks completely finessed. Oh, darn. Anyway, it's too bad I don't have that link handy. Was really a handy little page tab. This might actually be useful. So this is 1940. Do we have the 40s? No, that's garbage. Anybody happens to have that link handy? Jeez, it sure is when my computer blew up there a week or two ago. I guess a month or so ago. I lost the damn link. I don't even know where the hell it is now. I think this is going to be more of that government shit. Maybe this will work. What do we got here? Oh boy. No, they're not trying to confuse us here, are they? That's just a big waste of time. The sad part about it is half of what these guys' job is to do is just to try and confuse us as much as possible. So after a while, we end up going, oh God, I don't know what the hell. Oh yeah, fuck it. I just accept what they're ramming down our throats. It must be true. Anyway, should probably take the time to try and find this for you. Before I do this, we seem to do the same thing. Anyway, yeah, so let's see what we got here. I don't think this is going to work. It's too small. Too small, too small. Anyway, early 1940s, we had, yeah, see, that's the whole 1940s. That's no good. In fact, actually, I don't even know what that is. 20, yeah. So, and really, I might even argue you want to know what our next sort of cycle of inflationary pressures. I think we're actually like cycle wise, I think we're actually like right about here right now, which means we've got one more big inflation push coming ahead of us. Jerks. Anyway, fudge. Anyway, you guys have seen it. Can Chris? Can you do me a favor? Do you know what web page I'm talking about? I've shown this page so many times. Sucks whenever I do these videos. I always try and pull it up in the last minute and I can't find it. All right, thanks, man. You're a scholar and a gentleman. This might be it here. Inflation. Well, anyway, I'll leave it. If Chris can find it, then I'll show you the picture. So anyway, point here is by them actually going easy on the corporations and easing up here, they haven't done us any favors. In fact, they probably made the situation a lot worse. We know that there's supposed to be a second wave of inflationary pressure coming in like 27, 28, that kind of thing. And the issue here is, let me preface this by saying, are W's bullish or bearish? And then what is the data that we're looking at? So if I like pull up the Econs that just came out, and this is this whole sort of, the past week saw another round of bullish data. If we pull up the, where can I show you this? Give me a second, bear with me. This is where people go, fuck, this guy just keeps talking endlessly and he doesn't say anything. Let's see if I can find this. So this is the news and econs that I like to use. This page here. Economy adds many more jobs than expected. Well, I thought the Fedsters said that we had a soft landing. No, what a load of horse shit. But the point here is if you actually look at this data, it's quite shocking. Like if I go, come on. So what I really wanted to show you was the jobs numbers and more importantly, average hourly earnings. So if you were going to play like, I'm going to play the average hourly earnings futures contracts. Should you be bullish or bearish of average hourly earnings with an image that looks like that? Down, up, down, breakout. If you were serious about trying to actually control inflation, which these banksters are not, remember, great reset, this is a total con job, would you allow this to happen? Does it make sense that this has happened because these idiots have gone soft on interest rates? Can you connect the dots? Because, I mean, I think that's exactly what's happening here. This should have never happened. And now, I mean, hell, if these M's come in, you might find that the bond market just absolutely pukes out here. Because this is dangerous, what's happening here. Like, economies are not an average hourly earnings. They're not supposed to be growing at that kind of rate. That is way too far, way too fast. I don't know what the hell I did with that. Piece of advice for you all: don't go and blow up your computers. It just makes life such a fucking pain in the ass. Yeah, no, that's not exactly what I was looking for. Anyway, maybe I'll spend some time. You know what we'll do is while in the car, Chris and I will find the damn link. We got a lot of time to do this kind of research, right? Was that? Yeah, I know, but remember there was a really cool image that just had the 1940s in particular. I mean, I suppose I could scroll down here, right? And remember we talked about this. This is what scares you, right? Remember we just went through this with all the whole sickness bullshit, which frankly speaking is a total con job. Um, but you can see that's where the inflation went nuts. And of course, what a coincidence all around that sickness. So let's use the sickness to distract a human. Shiny object, shiny object. But look at what's supposed to happen here in 47, 48, right? And this will probably be 27, 28. Oh my goodness. Like almost brushing 20% annual inflation. That is just going to be so painful to swallow. So get ready for it, folks. This is going to be ugly. And the problem is that if they were actually doing their job here, and they were actually trying to control the money supply the way that they're supposed to, if they really actually gave a shit about actual purchasing power of the currency, which I don't think they do. It's incredible how they have this public mandate. Really? When was the last time that you disclosed how much of the U.S. central bank is actually owned by the Rothschilds, who are not American citizens, and they don't give a shit whether the U.S. Currency maintains its purchasing power. I mean, how's the British pound done over the past 100 years? It used to be the British pound was the world's hegemony. I mean, Jesus, that's just been drip, 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 train wreck. And I would imagine they're going to do exactly the same thing to the US dollar. By the way, when JP Morgan died, John Vanderbilt, I think his name is John, I'm not sure. Anyway, Vanderbilt, he publicly disclosed that he was like, wow, actually, it turns out JP Morgan isn't nearly as rich as I thought he was, because he actually sold most of JP Morgan Bank to the Rothschilds. They're the ones that owns JP Morgan Bank. Do you think the Rothschilds still own JP Morgan? Why would there be any reason for them to not own JP Morgan? I mean, would a central bank ever sell a position in JP Morgan? Or that's probably not the right way to say it. Would the Rothschilds have any interest whatsoever in selling their interest in JP Morgan? No way, man. They got a fucking lock. And basically, they have a lock on the US government. Anyway, so the point here is that this is accelerating, and it's almost scary what the hell this is telling us going forward. Because keep in mind, labor data is a lagging data set. So, you can see that the labor market was topping out, things were calming down, This would have been sort of like your this would have been sort of like central bankers have gotten control of the inflation problem. We're going to calm the economy down, just let everything settle down here while supply chains get reestablished. And then here, October, they didn't really have any reason to go and ramp up those bond manipulations, but wow, did they ever? And this is what manipulating the bond market has caused, where we're actually breaking out to new highs on wage growth. And remember, if you listen to that RJ Talks, he sort of said the same thing that, Yellen was actually pressed, are you actually going to try and, bring prices down a little bit here and try and, bring us back to the old world that we used to live in? And she's like, no, and just go watch it. He included the video in here. American population should have no expectation for prices falling at all, which means that if we get into an environment where prices might actually start falling, i.e., deflation, which is what this guy says. He even says, probably a bit of deflation would probably be a good thing for us all because, just he did a recent video here where the insurance industry is like literally doubling, tripling insurance policy premiums, and the public has absolutely no say in it whatsoever. And all of the individual states that have these sort of insurance review boards, and of course, you're not supposed to gouge the public, like they become completely inept bodies and they're completely powerless to these massive insurance companies. So, the inflation problem has not gone away whatsoever. We just went through a little bit of a lull. And the lull, like I showed you on that tweet that I put out just recently, was let's see where the hell that was. This was the lull in inflation. And if we were going back to that old world, they would have just continued this and just kept cleaning the market up. And yeah, if a bunch of zombie companies that really had no business being in business went out of business because of this, and the economy just kept contracting, and we get back to sort of a real world, that was instantly wiped out. And I would say that this is actually the better of the various worlds, because like I said, in other in communist dictatorships like my country, there's no stopping to this whatsoever. I mean, do you think the inflation problem in Canada is even the remotely under control? You're kidding yourself if you think that. And really, this is exactly what should happen through this cycle. Is the Americans will basically have the United States of economy will get used to this new pricing model and this new world economic order, and all of these socialist sort of MMT is a good thing. They really don't understand the cost of money. They are literally going to hyperinflate themselves out of business. And what'll eventually end up happening, what should end up happening, is this con job can't go on indefinitely. At some point, the economy will break, and it will just be the most horrendous break you've ever seen. It scares me. I mean, hell, you think the socialist medical system is broken now in these silly quasi-socialist communist countries? What happens when the government says, actually, we can't float any more debt? The market won't take any more of our debt. The whole thing's over. And, I remember living through the 1980s. In fact, I even told, well, it's a different conversation for a different day. But in the early 1990s, the Canadian government had to come out and just completely restructure, jack taxes up through the roof, absolutely just destroyed small business, in order to try and sort of right the boat. And I would expect the exact same thing's going to happen again. Have a lot of social. I wouldn't be surprised in a country like Canada. They do things like they say, well, you can't retire and start claiming a pension for, they'll add another 5-10 years onto that because, well, we got to keep the pension system going. So, my generation just gets fucked. I could very easily see stuff like that. Anyway, oh boy, a whole bunch of rhetoric. And it's the sad thing is we're in this environment where it's just going to be nauseum how this just it feeds on itself. Anyway, so there's your commentary about what the hell's going on in the broader market. It's a shit show out there. Now, the interesting thing about all that is that if the Fedsters were in front of the curve and everything was relatively calm, I don't think you would have had the runaway market that we're having. I noticed that the NASDAQ is going absolutely crazy here. And, this is probably going to be like the nifty 50s kind of economy. I'm not quite sure how crypto actually plays in this kind of economy. I think it should do relatively well. I would imagine the commodities themselves, this could be a bit tying. For the next 10, 15 years, these commodities should actually be under pressure. I'm a little worried, with Bitcoin at $40,000 a coin, everybody's completely lost the conversation about cost of production for one Bitcoin. I can absolutely guarantee you it's not $42,000 a coin. So, how much of this market's been bid up just because of the ETF nonsense? And is this what normally happens with Bitcoin and crypto market prior to the halving event? I actually think yes. This is actually what you see happening in Bitcoin is actually very normal. I don't know whether I have the chart of it, but and you guys have all seen this repeatedly, so it's certainly nothing new. Can't remember how to do this. Let's see what happens. Is that it? Yeah. Do I have it here? Bitcoin. I thought maybe I had it handy. Darn. Maybe I have it load. Let's see. Do we have it here? For lucky. Lucky, 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 lucky. Are we lucky? Are we lucky? Are we lucky? No, it doesn't look like we're lucky. That's not what I wanted. Darn. I mean, this is an interesting sort of walkthrough of how these cycles sort of work over time. I haven't actually looked at this chart in a while, but it is interesting when you go through each of these cycles to, we've got 3 of them now to go through each one and see the various different sort of time windows. How long is a typical correction? How long until the market actually starts turning back up? How long until, halving events from market bottom to breakout? And then once I think we're on the other side of the halving, then we're into the new bull cycle and lots of fun can happen then. The chart I wanted to show you, I just don't know whether I can do it relatively quickly. Actually, you know what? Probably the easiest thing to do is just scroll through that silly Twitter feed. Of course, we're not allowed to call it Twitter anymore, are we? All right, let's see how long this takes. Do 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 do. No, I can't go up there. Hey, there you go. That's the picture I wanted to show you. Sexy time. We're gonna have some sexy time. Let's have some sexy time. No, don't do this to me. It takes forever to find any of this. Anyway, the image I wanted to show you was the past 2 cycles, how prior to the cycle, we needed to come up and tag 61.8. It was almost like it had to happen. And I think that's basically what's happened this go round as well. I mean, not really anything out of the ordinary. I end up wasting so much time here, though. Darn it. And it doesn't look like I'm going to be able to find it. Damn it, Janet. I love you. Ooh, what movie is that from? That'd be an interesting one if you guys. Here it is. Yeah, I found it. Damn it, Janet. I love you. Now I'd be damn impressed if you knew the movie that came from. Give you a hint. It was Susan Sarandon. She was the lead. Anyway, so this was the 1415 Bear Bull. So blank tagged 61.8, then had to correct. And actually, this was about a 50% correction. Following, there is their halving event. Oh, damn you, Ian. You're smart. Good for you. Jeez, I think you got two. Yeah, you got two of the video. Chris, did you have any idea what I was referring to? Okay. All right. So this was the 1819, and actually they ran the market up into 61.8. Well ahead of the halving event. Here was the halving event way over here. So that was interesting, but had to tag that. And then, of course, this was our current cycle. And the big scuttlebutt was, can they tag that? Could they actually take price up there? And lo and behold, that's exactly what they just did here, right? Doink. There is your 61.8 tag, and see you later. So I don't think there's really anything actually out of the ordinary going on here. What I did find really interesting, I will definitely acknowledge this. When we did the Fed meeting video there the other day, which was a lot of fun, one thing that I mentioned through that video was I think that Ethereum actually works as a really, really good sort of growth proxy in our society, sort of aside from all of the bullshit and actually all of the blatant manipulation of the broader market, but good old Ethereum here. And what was really interesting through that Fed video, and I even made reference to it through the Fed video, that it actually looked like that Ethereum just was doing absolutely nothing. It was completely parked. So the whole stock market went zooming up through that event. Then it came crashing back down. And ironically enough, Ethereum did basically nothing. I think this was it right through here. And you can even see that, Ethereum, it is good to see that it is making higher highs and, well, sort of making higher highs. It was making higher highs, but it is making higher lows. We are starting to make lower highs here, though. That's getting a little dangerous. That does look like an M that just came in here. But it was interesting to see through that whole Fed event, Ethereum didn't participate. It just didn't do anything at all. Somebody over on YouTube is saying, can you see the caps? Can I see the caps? Do you have any idea what he's talking about? Yeah, that's right, Connor. Tell him Large Marge sent you. And it was on a night just like this. And when they pulled the wrecked body from the wreckage, it looked like this. Ah! Oh, that was great. Anyway, taking me back memory lane. All right, so back to our story. Are we kind of rolling over here a bit? Geez, it kind of looks like it, eh? Look at Litecoin. And interestingly enough, are we actually going to have to get to the point where we boot Litecoin out? Hi, Richard. Nice to see you. And replace it with Solana? I thought it was interesting in the newsletter this week. Chris made reference to the fact that Solana now, what was the headline? Solana registers all-time high in monthly new addresses for January. And, I think this is an excellent anecdote of how these games are played. If capital is flowing into the space, then you're probably going to see within the ecosphere, people are making money. And sure enough, this funny little Schalt coin, we'll call it, potato. And, this is a really good lesson. So here's that little tidbit in the video. My God, he actually said something that I can learn from. if you ever see, like I have a rule when you're trading M's and W's in RSI, I want to see two W's in the RSI study for me to start getting excited. The first W stops the bear run. The second W, first we'll see if this thing's going to load. The second W is actually your buy signal. So that was actually one reason why I was starting to get a little bit enthusiastic about this. Let's see. Look at that. I'm not even quite sure what the hell's going on here. I don't use this to trade off of. I just theoretically use these for price. Yeah. So here's a really good lesson for you in the application of that RSI concept. So you can see, there is, you could argue that that's a full W, but there's a cute little initial W. There's the second W. Or you could even argue this is the first W, and there's your second W. And of course, you would ideally like that W to come in on a cross through that 50 line. So a really good application of that RSI concept, just hunt for two W's in a row. And that's what led to this thing popping here. The interesting thing, though, is that so many TRIers, like I was posting in, we have a little old lady room that, if you are a little old lady crypto person, all the kids are posting all of these meme coin ideas and shalt coins. And we even had Steven on the broadcast on Friday. He's sort of our Solana harmonics guru. And we spent a lot of time on Friday in the after party talking Solana. Although, Chris, another note you should make, if you wouldn't mind, is can you circle back and see whether the Friday videos were actually posted to the site while I'm out with Liam? Because I don't think I posted them. In fact, I know I didn't. All right, thanks, man. Especially Steven's broadcast, that was gold. But anyway, so we were talking lots about this potato putting in bottoms and breaking out. And there was a big rally, and it did produce a double. Notice this is 100% gain from the breakout. And on the 4-hour chart, you can see the double bottom here. So I do think that there was a buy setup here off of this level. You could even reload zone and got even cheaper. And of course, this is a big question about DeFi and all this is, you may have had your open order working. It'd be interesting, Adam, you're watching the video. I know you take a lot of these trades. Did you actually get a double fill here? Because one of the things that bugs me about this sort of DeFi space is I'll work open orders. There was a name that I had an open order working for, and market traded right through my price, and I never got a fill. I think it was off of this guac. So, I mean, it's just the way this game goes. And unfortunately, with, the state of affairs with the way Big Brother is manipulating things, I think life's going to get a little bit more challenging for us in crypto. And we're probably going to have to spend more time over there in DeFi. I don't know whether it was this guy here. Actually, here's another good example of the W. So there's your first W. It looks like, man, it's a bit sloppy. But anyway, there's a really good looking W right there. Through 50 line. Of course, that's off that double bottom. And of course, wow, what a trade, eh? I came in, did a little bit of nibbling originally here. I think it was about 28 or something like that. I had my order working up here at 56. Actually, that's one that it didn't trade to, so I didn't get a fill. But there was one that I was working an order at, and it traded right through my price, and I never got a fill, which kind of bummed me out. But anyway, welcome to DeFi. It's just the way that goes. So anyway, point here is, with our comment here about Solana, basically really just loving it right now. I have to say, give shout out to Dan and Colin and the people over at Hero and all that. They've been bullish of Solana right from the bottom. I think they even said they bought some more when people were panic dumping it last fall, like a year and a half ago now. So they're doing great in there. I don't know whether Solana is really a buy here, but what I think's happening here is, very typical, very hot topic, very hot market. And of course, the public's coming in and buying the top of the market. I mean, it's what the public does. Don't fault them. It's just the way that they operate. Probably the best place to show that. I think I can probably show you it here. UST. Hey, remember that? Remember UST? I wonder if any of you remember what UST is for. Not the best story. Anyway, so here's that Solana chart here off the higher time frames. This is looking a little dangerous now. You can see it looks like we have a short setup that has been working here, just sort of muscling its way along. I think you might get a buy setup if we can somehow, there's one, if you're thinking like bullish bot A, B, C, D, we have done 33. So that's, I suppose, encouraging. But what I'd like to see if I'm a bull is, and you can even see it here, was what I really need to see is a W on the other side of this trend line. So I'm not really in a huge hurry to get re-bullish here. I suppose if this thing does go sideways and starts to turn back up, we might consider that a small bull flag. But we got one low, we got two lows. We just put in a little bearish fractal there. That's not so good. There is this empire fractal here. This is a daily chart too, so that's not so good. So you can see that if this thing slips down below these lows, then that paints a new M, which of course we all know M's not usually bullish. In fact, they're usually bearish. So if anything, if this M does fire, I should probably be thinking things like Foggenbombs, which means I want to be thinking, and what a big surprise. 2.618, which should be sort of your initial target of Foggenbombs, can be nothing more than just a tag of the trend line and a test of this low in earnest. And of course, if we break it, then if you're a bull, you have to start the count all over again, 3 higher lows, et cetera, et cetera. So as it stands right now, we have this empire that just fired. So that's a bearish sign. If anything, empire bottom, empire top, there's the bottom end of your range. There's the top end of your range. We are stuck in that range. If we can get a nice consolidation, maybe even 3 higher lows here, then, and actually this is a really good analogy where this is a daily time frame, but hopefully you can see, remember the universe is a fractal. Hopefully you can see that this is probably setting up like a lower time frame bot setup. And of course, if it does come in, well, then that'll probably trigger the higher time frame bot setup. Always difficult to move these damn charts, though, if you have this trade thing on here. It drives you crazy. All right, so let's see if we can do this. There we go. So you can see that this A to B, this could very easily be a bullish bot, right? So we would want to go A to B. And here, remember, we did the fractal. And if this is a bullish bot, I don't know. We'll see. Then we're like boomity boo, does 33, but no more than 66. You can see we're brushing up against 66 as we speak. So if these lows fail, then this idea is toast, right? But you can make the argument that just do a simple trend line off of the peak here, something like that. If we can somehow, you can crisp that up on your own. If we can somehow get 3 higher lows and try and have that come in on the other side of this trend line, then that might set up a cute little AB equals CD there to there. And then, of course, continuation there to there. If this is 3 higher lows, blah, blah, blah. And notice, interesting how that AB equals CD is going to take us right up to test this high. So that's interesting. Then, so if we do break up here, then maybe what that's suggesting is that this is a bot. Remember, the universe is a fractal, so you can just keep doing these over and over and over ad nauseum. We could drill down to like a 10-second chart and hunt bots. So, if this little one fires, then that means that this bigger one might fire. And that would be measured off of that low. And if we did bot setups, bot trades, and of course, always backwards, so we better flip that around. Interesting. So the bot setup to fire this bigger bot comes in right off of this level. So if this thing can go and W out 3 higher lows, momentum indicators start pointing up, blah, blah, blah. We start cranking up here. Then 1 low, 2 lows, 3 lows. Does this thing start to fire, which would paint a target up top here? And of course, interesting, if that fires, can we start drawing really big bots? Right, where instead of this being a 50% bearish objective, we do things like go just whoops, that's not what I wanted. I wanted to clone this fib study. Let's see if we can do that. Hey, there we go. All right, and then we can start drawing. This is a massive one off of here. Holy moly, is this ever big? That's what she said. Anyway, can't even, it's so big, I can't even see it. Anyway, so we'll draw that off of there, doink. And my hunch is 25 is the entry is probably up top there. So bot. Oh, interesting. 25 is right there. So let's go back to a higher time frame chart. Let's go maybe like a 4 hour. So if, big if, this is actually a bot, A to B, then, and we start getting bullish resolution, which should be like, give me 3 higher lows and 3 higher highs. That would set up off of there. You can see how big this is. Whoops, darn. Where is that? Let's go there. There it is. All right. So there we go. Interesting. So that higher time frame bot kind of corresponds with the lower time frame bot. This level right in here, if we resolve bullishly through it, then that probably sets up for quite a moonshot up top. And interestingly enough, Stevens actually had a target of about 160 to 180 area, somewhere up in this area for quite a while. I think that is his objective there. So, as it stands right now, I think we're still working this top here. Probably a little bit early to sort of declare a new bull, but you can kind of see. I mean, just keep it really simple. If this thing, you can see it looks like some sort of head and shoulders. So if this thing actually starts Wing out here, and you see bullish structure come in, and you see that we start cleaning through these highs here, then it means we got a pretty good shot that this thing's still alive. And we're still a bull. I'm skeptical, right? I'm from Missouri. And I'd also say too that we probably need to keep the broader market into perspective. I could see a push up top here. Candle body highs for trade location. Was that the extent of that push that we just saw last week out of Bitcoin? I don't know. I could see some play up into this wick. There might be, especially with the way the NASDAQ is acting, because this economy is just insanely hot. The central planners have kind of let inflation come roaring back here. You can see, these tech proxies are just absolutely on fire here right now. I don't think that there's any stopping this right now. I would be very, very surprised to see this thing stop. You can see things like the Meta, they actually announced a dividend now this stock's going to pay. Huge volume breakout there. Nice W there in those green volume bars. That's a pretty powerful signal. I mean, maybe we've hit some sort of short-term inflection point. I don't think so, though. And certainly no sell, no short signals anywhere here. Maybe we go sideways for a little bit and then maybe a top develops, but there's no top anywhere in sight. I wouldn't even be surprised if these damn stocks actually gap open higher tomorrow. Also, too, we think about the broader market, January Barometer. They say as January goes, so goes the year. So you tell me, has January finished on a relatively bullish note? I would say yes. I'd also say too, though, and I actually saw it, Josh has really exceeded expectations again. I mean, he's such a good analyst. He did up a January Barometer blog post for the blog. And I have to say, did a fantastic job once again. do yourself a favor and go and read this. It's free, like, so all you people on YouTube and stuff, I'll post the link in the chat there. Maybe Chris, you could also post that in the descriptions. Maybe comment down below. Do you agree on the January Barometer report that was produced by TRI? But I have to say, this is absolutely beautiful. It just reads like poetry. And interesting, like the first half of the year, it's kind of sideways. And then all of a sudden, out of nowhere, the second half of the year is just an absolutely insane bull market. Given our whole talk about the inflationary pressures, I think they've let the genie out of the bottle. There is no slowing down of the U.S. economy. There is certainly no soft landing or anything like that in sight yet. And I would agree with Jerry when he said, no, we're not even close to that yet. There is no way the Fed is going to lower interest rates in the face of that labor market. I am sorry. They lower interest rates in the face of this labor market, this thing will go absolutely fucking insane. And of course, this is now printing 6% annual inflation rate. Uh-oh, wait a minute, that's not 2%. So there's no way in hell the Fed can lower interest rates anytime soon. As I said to you repeatedly, this was all about them manipulating the long end of the curve. And that old quantitative easing, quantitative tightening bullshit. They did a whole bunch of quantitative easing there through the fall in my country. They just fucking went apeshit crazy. Quantitative easing again, which of course is going to create massive inflationary pressures. And here we go down that rabbit hole again. So I won't start going on about that. But what I wanted to talk to you about, which I think is important, and Josh actually nailed it again in his January Barometer post here. Has there been anybody else who's been sort of talking about, would this year, would it be realistic? Keep in mind this image right here. This is your January Barometer image. And maybe I can show you that. I think I have it on here. In fact, actually, I think I tweeted it out, didn't I? I think I did. Right at the top here, I thought I did. And this is a cool image. I would bookmark this, right? Because it's nice and clean. It's nice and simple. There is your January Barometer. Now, look at that image. And is there another image that other people in the marketplace have posted that looks a hell of a lot like this image? And these guys have been in the market forever, and I would strongly suggest listening to them. Of course, with Josh and TRI as an awesome source of reliable information, would they be on top of that? Well, look at what Mr. Larry Williams said. What does a typical re-election year look like in the latter part of the 20th century and the first quarter of the 21st century? Oh, it usually looks like kind of a sideways first 6 months of the year. And then as we approach the election, all fucking hell breaks loose and we just crank higher. Excellent work, Mr. Williams. Of course, there's another shout out. Another gentleman I would highly recommend you listen to. I think he's very, very intelligent and far smarter than all of us put together. But anyway, nonetheless, there's Larry. And the irony of it all is that actually even just recently, he was, I don't know whether Josh has that in here, but all right. So point of the matter here is, and I had it on the screen there just a second ago. I don't know whether I can find it, but we've been barking about this for a while. I think it was right down in this area. I just don't know whether I'm going to be able to find it, but it was on the screen just a second ago. Good old, there he is. So this was back in December. So you can't even make the argument that you didn't sort of have lots of warning that this is probably what's going to happen. So again, hats off to Larry. You can see he's getting a little bit older. But my hunch is that right in this area here, which is where I think we are right now, I think that the inflation data is going to come back really ugly. I wouldn't even be surprised if things like energy prices start taking off here again. And the Fed's going to be like, we might actually even have to raise interest rates some more. And of course, we all know, based on that rant that I did for the first part of this video, that the reason why interest rates were falling was because of a total con job by all these central planners and central banksters, because they wanted to make sure that all of these zombie companies would just go ahead and refinance all their bad debt, and all the banks would just keep collecting all their insane fees and mortgage premiums and points and percentages and all that bullshit of this con job of a society that we live in. So they let all that happen. These zombie companies that shouldn't be in business are all going to go refinance, and Joey Diamond's going to make a ton of money in fees. And now I think that they're going to have to go through the period of now saying, "Oh, actually, you know what? Maybe we actually need to be a little bit more strict on inflation problems. The labor market's getting too strong, and so we have to spend the next sort of 4 or 5 months kind of cleaning up that problem." And then I think what ends up happening is by the time we get through summer, of course, sell in May and walk away. Whatever commodity pressure, any sort of economic pressure that's been building through the winter, that will dissipate through the early summer, and that will set the stage for the election showdown. And everybody's going to turn their attention to the elections. The Fed is going to want to be perceived as being on the sidelines. So that means all the inflationary pressure. And of course, does it help Joe Biden get reelected if stock prices are moving up, if jobs are strong, if the workers feel as though they're getting pay raises and stuff? Of course it helps him. So don't be surprised if we see quite a bit of upside pressure here. Then, interestingly enough, let's tie it all together. Josh, of course, in this awesome blog post includes Mr. Benner. And what has Mr. Benner been saying? Well, Mr. Benner's been saying that we should have bottomed somewhere in 23 and we should basically rally into 26. So should 24 be a down year? No. It's probably not a good idea to expect a down year here. So put it all together. I think, again, Josh, fantastic job on the blog. And I think it's business as usual. And I think that on balance, if anything, I don't think you should be looking for crashes here. But I definitely think that if anything, the central planners have kind of fucked around with this a little bit. They've released the inflation genie bottle again. Let's hope they can get in front of this thing here over the first 6 months of the year. But if they can't, we might be back right into month after month. I mean, what I'm worried about is, you can see in 44 here, that's when this thing stopped, right? There is 44, 24. Is that where the absolute best scenario? First few months, remember, it's February right now, so we're like right in here. Do we have just a couple more months, and then we have to start getting ready for this inflation thing to start ticking up? And by the time we get to 46, 47, 26, 27, then we're right back into inflation's out of control. Get used to it. Up or going prices again. Shitty. Okay, so there's your rhetoric, sort of my overview of what the hell I see happening in the world right now. Don't really think it's a good idea to go and bet the farm on the market. Kind of like what I showed you in this image here. If you're long the market, great. Enjoy the ride. Hopefully you've sold halves on doubles and all that kind of fun stuff. I did not get in on these names, although I will say this Facebook, when it was down around $100, that was basically a no-brainer. You should have just gone up and picked up a few shares. You could have got your double pretty quick, and of course you'd be sitting on a second double now. I did go and buy the Communication Select Services ETF for my registered account when I saw this big fat W come in. Unfortunately, it hasn't done as well as Facebook. It's only up 50%, but that's your retirement account. But can I justify you coming in and buying this market here now? No. And unfortunately, that's the same thing as Bitcoin. There's the bottom down at around, 18 G's. It's uglier than sin. I'm not going to say it's a pretty bottom. And reload zones, I've told all of you repeatedly over the years, and any student of mine knows, usually the market loves to bottom off 78.6s. So, and actually most times, actually we go down beyond 78.6. Then you find over time, the market actually bottoms off that 78.6. In this case, it was damn quick, eh? Down, up, down, away we go. This is why little old ladies buying nanny nibbles and stuff in reload zones. If you bought some here, bought some here, bought some here, maybe even bought some more here, right? Your average would be somewhere in here. And of course, you'd be laughing right now. But can I justify you coming in and buying Bitcoin right here? I'm sorry, folks. I just can't do it. I could see a trade, kind of like that whole walkthrough on Solana. If, we've got 1 kilo, my model says, because I'm a chicken shit, I like to see 3 higher lows, and then I'll put my stop loss way below this third lowest low, and I'll let all these lows defend my trade. So if this thing did do something along those lines, then I can start measuring out bots, but this would be a trade. It would not be like investment quality. And if I wanted to invest, nanny nibbles, little old ladies, just go and buy, throw it in a safety deposit box and forget about it. Well, it would be in the reload zone, at or below reload zones. Nothing ever changes with regard to me. It's exactly the same thing. So, if this is trend continuation and we carve out some big ass W, great. Then it's a trade, and look at it as a trade. And if we break key support, you better get the hell out of there because you don't know how bad can get. If you're a nanny nibbler and you're a little old lady and you're kind of like, I want to buy a name that's relatively near the low end of the range, I can't touch this here. And unfortunately, there's a lot of names in crypto that look like this. If you had bought anywhere along here, you should have been banging out doubles, establishing risk-free trades, put a little bit of money aside for the tax man because we're all good citizens and we all pay our taxes, right? Yes, right. But the point here is, can I come and invest new money into a name that looks like this? Can I come in on the total market, all of the cryptos, and come in and put new money to work? What are we supposed to be thinking, boys and girls and houseplants, if we ever see the market making higher highs in price, but our momentum indicators are making lower highs in price? You all know the answer to this. Don't fight this. And the irony of it all is there is where that momentum divergence occurred and Willie stupidly overbought, right? That was back here. Remember, this is a 3-day chart. So literally, you were told to cool your jets back in December. There's really nothing to be done here. And I would say that until you actually start seeing W's come in here, there's still nothing to be done here. And I hate to say it, we look at our beloved corn. This is a weekly chart. I got M's working here. I got Willie stupid off the weekly chart. Yuck. Do I have a confirmed bearish momentum divergence? Ooh, that's the one saving grace about all of this. We have no weekly divergence. We did have one here working here. Then they went up and busted it on the ETF event. Now, that in itself might be a little bit of a trap because, of course, that was a big liquidity event. So I would expect one more push up here in momentum. But, and I've also said too, I really don't like the fact that we haven't hit this 50,000 number. That's a big fat round number. We really should hit that. I'm actually surprised we haven't. So could I see some sort of spike up top here, hit that 50,000 number, complete this inverted head and shoulders price objective, but it's a trap? Remember, we have the halving event coming up here. I do find it interesting. Remember, I made reference to that eclipse window. Notice that on the first eclipse, the market went absolutely stupid up. We've got halving events coming up here in April, and we know that Bitcoin likes to top out about a month ahead of the halving event. Go look back on Litecoin, just recently did it. It was like almost cliche the way that worked. So is this normal? In my experience, usually these markets top out about a month, maybe 2, 3 weeks, whatever, but about a month roughly ahead of its halving event. And you can see in this case, we were kind of like, well, maybe we've had the halving event. We've backed up into Collins pump chaser zone. We can turn back up. What do you think? Did that work? Did we get any W's here? Sorry. We actually continued our way lower. So this is actually what I'm expecting out of Bitcoin through halving event. And like I said, could we have one more nice little fuck you move? And of course, all the crypto people who are just religious about this stuff, they're gonna there's a reference, I think they call it like the God candle or something like that. They were expecting it to happen on that ETF event, and they all got fucked over royally. Could we see a repeat of that about a month or so ahead of the halving event? Remember, I said earlier, I saw the whole market pivot on that last eclipse. I love the idea of the market pivoting through this eclipse. And then there's our halving event over there. And then we go through this sort of very natural 50% retracement. You can see if this is the high, I still think that we're going to take out these highs, but that's just my personal opinion. But if we do, there's 50% level. And remember, I showed you that Twitter image of the 14-15 cycle, because I think that's going to be a repeat here, although I think I got rid of it now. Damn it. Anyway, I should have kept that image on the screen. I think this is a repeat of the 14-15 cycle. And you notice that the 14-15 cycle, we literally came down like that and just smashed into the 50% level. Here it is here. Following the halving event. So we went bang, there's the halving event before, market topped out before. And if you do a fib from this high back to this low, this event right here was a perfect 50% retracement tag. And that's what I think we're going to do here. And also notice too, tag into previous market structure. And remember, we had said that Mr. Fink, he basically put the bottom into the market here. They did that ETF again. I've said repeatedly to you guys, usually these ETFs, when they launch them, they have to fall by 50%. And actually even Facebook for that matter. If we go and look at Facebook's IPO, this darling here, when it actually IPO'd, I mean, the irony of it all is that the stock market's exactly the same as crypto. There's really no difference. But when this thing IPO'd here, this thing just went bang, 50% haircut in your face. We all know how the coin IPO went. Wow, that was a disaster. So my hunch is that these crypto ETFs, I think they need to fall 50%, which would be very natural. It would be very normal. And I think it has to occur. If we go back to January Barometer talk, I think it has to occur in that window. All right, I've only got 15 minutes left to answer any questions in the AMA document. So I kind of fucked this up as usual. Way to go, Brian. All right. So, and actually good. There's still only one question. So you guys didn't blitz me with a whole bunch of questions. So let's finish off with this. Then I'm going to head off to Lily. If everybody wants to give me a karmic best wishes for Lily, I'll ask for that now. So you have plenty of time to do so. But I'll answer this question, and then literally I gotta hop. And of course, feel free to come on the site if you want to come and ask a question. If you want to review Steven's broadcast from Friday, if you want to come and read Josh's January Barometer report, which is actually free. But you want to come and hang out with us? We got a free trial. You can come and just kick the tires for 30 days. Come in and hang out with our community. There's Dan posting in the lounge. Let's see what Dan's saying here. What are the main oil charts to be watching? As I've heard you say, February is the bottom historical, and then sell in May and go away. So actually, Dan, maybe you haven't been around long enough. But anyway, I used to be a commodities broker. And the commodities sales pitch was you buy your unleaded, hint, 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 there's your answer, The middle of February, you sell your unleaded. The middle of May, you made money 9 out of the past 10 years. Any of my old students probably remember that. Anyway, so specifically the market I would be following is the reblended unleaded gasoline. And it makes sense, especially if the consumer is feeling really strong and robust. If we go and look at RB, I think it's Rob. Futures. Oh, it's just RB. Rob, there it is, gasoline futures, and this stands for reblended. Ah, look at that. You can even see the W coming in on the market. So the seasonal trade, actually be interesting to see if this is in a reload zone. I bet it is. Oh, no, it's actually a bit expensive. Didn't even commit. Maybe that means like middle of February, we should look for a little bit further of a dump here. That could be the case. It wouldn't surprise me. But the seasonal trade is you buy your unleaded the middle of February. So that's basically right in here. You sell it the middle of May, which is right up here. You made money 9 out of the past 10 years. So I would be, and the technical objective that I would be using would definitely be that gap fill and basically a test of that high. And my hunch is that's probably 50% of this range. So there to there. There's 50%. So in essence, just basically going after those highs, cleaning them out. You know, good old Colin and your buddy Colin, his dump chaser zone. If you believe this is a bear and you want to join the bear trade, the dump chaser zone goes, where's Colin? Pump chaser, dump chaser. There it is. So you can see. In essence, I would be looking for some sort of seasonal peak right up in this window. To go short coming out of May. But what this does mean is this is basically what we have in front of us. And it doesn't have to top here. These bastards could take the damn thing to new highs if they felt like it. So you can see here is sort of that notice, I guess 2 years ago, buy your unleaded the middle of February, sell it the middle of May. Did you make any money? Boom. Here's last year, buy middle of February, sell, interesting, it topped out in April. By middle of May, you were up a little bit, not a hell of a lot. So if anything, the fact that last year was kind of a non-event, mind you, this, you know, if you were playing the futures market, that would be a pretty good trade there. My hunch is that there's probably a very typical seasonal trade coming in here. You can see previous year. I mean, it's not rocket science. It's really basic economics. You know, humans like to drive in the middle of good weather, right? But wholesalers buy all their inventories getting ready for that good weather. So in May, right? And so May over here is there. So buy the middle of February, sell the middle of May, you made money 9 out of the past 10 years. So you can kind of see how it works. Maybe last year was that that 10 out of 10, but you didn't make any money. I'd be willing to bet dollars to donuts. There's probably a pretty good trade coming up here. So hopefully, Dan, that answers your question. I'll even throw that image in the room there for you so you have a reference. I'd save that, bookmark that, right? Throw it into your journal, right? You're doing your journal, right? Because you're a good journal, good level 1 student, right? Doing a journal, right? Okay. Now to this question, and then, like I said, got to be on my way for Lily. And yeah, the ear still aches. Thank you for asking. But hopefully, I'm going to have a doctor actually do something tomorrow. And it's a relatively simple procedure. Doesn't take any medication. It doesn't take any, like rocket science. No major procedures. It just takes warm, soapy water and somebody who knows what the fuck they're doing just to flush my ear out and get rid of the clog. Just so sad. But anyway, thank you for asking. Who was that? That was Bursitogard. Oh, there's a name. All right. Okay, so let's see this question. I got 8 minutes to answer this question. Do you think we'll be able to do it? I gotta say, this is looking pretty fucking slick. Is this from our site? Where the hell did you get this? This looks cool. Insider ownership? Wow. Nice summary. Whoever did this. Let's see what you got here. Hi, Brian. Dan here. In week 3 lectures, you talk about various different screeners to find stocks. Okay, that's good. The one that interested me the most was the CanSlim Insider Finder. Yeah, CanSlim. Okay. Remember, CanSlim was first created by William O'Neill, who is the founder of Investors Business Daily, and very, 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 very wealthy man. I would strongly suggest. Oh, are we okay, Chris? Are you chiming in here? Okay, that's all right. So if you are interested, there are tons and tons of books and stuff done on CanSlim. There are like tons of websites and stuff. I'd say it's a winning formula. And what I would say, Dan, it's important for you to remember this. Technically, the best chart setups for CanSlim stocks are cup and handle patterns. You probably don't know what a cup and handle pattern is right now, but just write that down, right? And even put like cup and handle, question mark, question mark, question mark, because that's usually how CanSlim stocks technically set up. They love cup and handles. Okay, going into TRI library and pulling this link up, would you be able to take us through and explain what the information here all means and how it could be applied to make a trade or speculative decision of what we think might be about to happen? Okay, so as we said, we're rational analysts, so we want to have good fundamental reasons to justify participating. And then once you've got your good fundamental ideas, then you're going to have to figure out what type of risk taker you are and then apply sort of trade management rules around that. If you're a little old lady, you can just start nibbling away, right? I had low share count. Insiders are long. They're growing earnings. Year over year, they're expected to grow earnings quarter over quarter next year, blah, 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 blah. The way the whole thing goes. If you are a Joe Sixpack, then that means you're going to have to time your purchases a little better. You can only risk 50% of your capital invested. Of course, if you're a margin or leverage trader, then you have to trade setups and you have to be religious about getting stopped out and walking away if the trade idea fails. Of course, you're going to learn about risk management and all of that stuff that I just mentioned there next week. I can comment a little bit about fundamental CanSlim ideas. And really what you want to do with these FA models is you want to use the fundamental analysis to build your universe of assets that you are interested in. So what should end up happening is you should screen the universe for, okay, I like, this stock because it meets like this fundamental criteria. It could be GARP, it could be CanSlim, could be VCIM, right? Doesn't really matter. And then you've got your watch list, and then you're hunting the technical setups. So what I see off of this page, I can just comment about what we see here. Although I don't know how to make this bigger. There we go. Well, this doesn't really help, but anyway, let's see. Why can't I move this? What happens if I go? That's weird. I can't move it over. Anyway, I kind of wanted to make this a little bigger. No, that's not going to work. And I think I saw you say just a second ago that it was this link, Finviz. Finviz is a great site for screening for fundamentals. So what do we got here? We got small cap stocks, low institutional ownership. Why? Because you want the stock to have the ability to go up like gangbusters. The only way the stock can move like gangbusters, move up like, like Tesla kind of moves, is if the institutions are not long, but they are told you now must buy. A great example of that is when a stock is added to fundamental. Hello. Something's about to fall off my window. That'll be interesting to see if that crashes down or not. Anyway. So like if a stock is added to like the Dow, then anybody who runs a Dow ETF must go and buy the stock. That is like the low institutional participation. The stock is outed to the Dow Jones Industrial Average. So now a whole bunch of institutions have to come in and buy the stock, and they will just market buy, which of course sends the stock up on a parabolic move. Like exactly. Think Tesla. Tesla's a perfect example of that. You can also think of things like Apple. I mean, God, I remember back in the 90s, you couldn't give Apple stock away. And this one guy, Dr. Hans Block, he was buying Apple at like single digits, $7 a share, $8 a share, $9 a share. And there was just a fraction of the amount of shares that are out now. And you can imagine how rich that guy is. You never hear about those guys. But Dr. Hans Block is probably worth all of us combined. EPS growth quarter over quarter. Actually, quarter over quarter, we want to see greater than 25%. And EPS growth over the year, you want to see that greater than 25%. And remember, this isn't stuff that I created. This is William O'Neill. Google William O'Neill, Bill O'Neill. Google CanSlim. Google Investor Business Daily. Now, they do have like CanSlim. Every single letter in the CanSlim model stands for something. So like C stands for like current earnings growth 25% or better, right? So that would be this one, EPS quarter over quarter. A stands for annual growth rate, right? That's at 25%, this growth this year. N, this is a tricky one, right? Usually stands for like new product, new development. So when you're going through these companies, if you are interested in investing, go and kick the tires and actually ask, what are these companies doing? Like the most famous stock of William O'Neill's was he invested in Home Depot when it just first came on the market back in the I think it was like the mid 90s. And it was this whole idea of these sort of, hardware stores, but on sort of like big box scale, and where, they had like people wandering around the warehouse and they'd help you, with advice and tips and stuff like that. That was a brand new revolutionary concept. So that's the kind of new that N stands for. S stands for supply of stock. We want to have stocks when less than 20, 30 million shares out. Now, unfortunately, in this screener, they don't give you, unless you, of course, you want to subscribe for the high priced service, they don't give you the screen to actually screen for the amount of shares out. Although I have seen sometimes they have it, sometimes they don't. But this is why we went with market cap here. And if you look down, right, you can just simply screen through, anything like this one, 37 million shares out, that's too much. But, you can do that. And this guy here, 39 million, that's too much. I mean, ideally, you want somewhere between about 15 to 30 million shares out. So like this any right here, 14 million, perfect. This BJDX, 24 million out, perfect. But like this 1 million shares BKYI, that's a little too light. You don't want the issuance to be too thin, because then there isn't wide distribution of the stock in the market, and you can find that they can really fuck around with the price because there just aren't that many shareholders. So write this down, Dan, and anybody else who's listening that's curious about this. Ideally, you want right between that 50 to 30 million shares out. That really is the sweet spot. Some of these, like with 3 million, that would just be too small. Now, the problem, like I said earlier, is, if you want to subscribe to their paid service, great, you can get it. But you can see they don't have shares outstanding screen on here, so I can't filter. I want to see a minimum of this and a maximum of this. What we had to do was just this micro cap filter. That was the only thing we could do. So that's CANSL, stands for market leadership. This is a tricky one, kind of hard to do on a platform like this. And it was actually half of the reason why William O'Neill created the Investors Business Daily service. He actually bought a company called the Chicago Sun-Times newspaper that was totally defunct and it was going to go out of business, and he completely rebranded it. And he called it Investors Business Daily. And it actually produced a metric that the CanSlim people love, which is relative performance. And what you want, and you can come up with screeners on your own. Dan, you're very, very smart at this. We actually do this when we are on like the Solana networks, and we're looking for DeFi names and stuff to invest in. I've seen you guys do this. Like if I go to this bird eye and I just go to the front page here, you can see how they have like relative performance, right? Find gems and all this kind of stuff. Well, it's kind of the same thing, and trending and really, popular names. What we want to find with CanSlim is you want to focus in on those stocks that are at like the top 5% of the market. You want to be in those leaders. And so this is why you're going to have the cup and handle type chart pattern, because you could make the argument that a cup and handle, and I need for you to use your brain here, Dan, anybody else listening. What is a cup and handle really another example of? It's actually an example of a bull flag. A cup and handle could also be a bullish bot. So try and use your imagination, see if you can connect the dots with those concepts. So point here is that L stands for market leadership. We can, over the coming week, if you really want to work with me, in the daily briefs that we have coming up through the week, we can figure out other sites that might be able to help us out, find market leadership statistics and stuff like that. I'm wondering what page. I guess we were just over here. We were on the FinViz page, eh? Yeah, here. All right. I stands for low institutional participation. So that's what this is all about. And I talked to you already about that. Why you need to have low institutional participation. M stands for market state. And really what you want is you want a friendly market state. Sometimes they'll just use something as simple as, is the S&P 500 above the 50-period moving average, i.e. it's in a bull phase. If the market is above the 50-period moving average, and of course we just saw that January Barometer, so you tell me, do you think the S&P is feeling pretty good right now? I'd say it is. So that stands for M. We want a happy, friendly market state. So if you have a stock that met all of those criteria, keep in mind that this screen itself, it finds a good chunk of them, but you're still going to have to go. And like I said, we can find, in fact, as a community, let's see if we can update the links and see if you can find us. We'll do it as a whole project for all level oneers. See if you can find CanSlim screened results on the net that we can share with the group. Right? Just do a CanSlim Google search. Hopefully that speaks to your question, Dan. I laid out the criteria. I think what we'll do now, though, is why don't we leave it at that? I'm already 5 minutes over, so I should be getting out of here. And then let's circle back around, Dan, and give that some thought. Maybe even play this, what I just said here, back a couple times and write some notes. And come back to me, and let's, in the after party tomorrow, let's make an assignment for everybody on the site. Let's have a CanSlim conversation in the after party about sites around the net that we can use to filter these fundamental ideas. All right? Does that sound like a plan? All right. So have yourselves a great day, everybody. I think I'm going to leave it at that. Got to head off and do my job now, of course, with Lily. So wish us luck on the roads. And of course, oh boy, day after tomorrow. Tomorrow's going to be relatively calm. Tuesday could be life-changing events. So get ready, everyone. Oh boy, this is going to be crazy. All right. Have yourselves a great day. PMA for the win. Sure hope you enjoyed the offering. All the best. Hit the like button, subscribe, ring Colleen's bell. Sure hope Colleen's doing all well out there in the world, wherever she is. Slow and steady wins the race. Remember what your number one job is. As Marat would say, hugs and kisses. All the best. And bye for now.